Copper Fox has been around since 2002. We've been focused primarily only in the copper space in North America. And this introductory slide shows the various projects which we're involved in. These are forward-looking statements, so I urge you to read them carefully, as it does contain forward-looking information. A little bit about the company itself. You can see that we have about 550 million shares out. The insiders own about 60% of those shares. We have no debt, and we have about $1.4 million in the bank right now. And our CFO is Mark Brown. I'm the CEO and chairman of the board. Copper is essential. You've heard from Osisko Metals about their forecast on copper in the world going forward, and we believe in that. And you can see there's a various numbers of reasons why it is important, primarily because of the net zero by 2050. And also there's important uses of it in replacement of infrastructure, and there's a growing need for copper in the biomedical medical space as well. Copper supply demand, there's a number of these forecasts out there. These ones I still think were fairly conservative, but I think they're still reasonably accurate today. On this slide here, I think this is the one that's most concerning, I think, to the industry right now. If these guys are right, by the year 2035, 200 existing copper mines are going to go out of production. And as you are all probably aware, you can't build them in probably any less than 5 to 7 years, and that's assuming you're regulated, you're permitted to go forward. But anyway, any way you look at it, there look like there's a shortfall coming, and I think we have the structural elements in the industry right now that's probably prediction was we won't be able to fulfill the required demand going forward. These are the investment highlights. We are focused only on large porphyry copper systems in Tier 1 jurisdictions, and that basically we're restricted to North America. And that's more by strategy than her circumstance. We have 2 advanced stage projects, 3 exploration stage projects, and they're all in Arizona and in British Columbia. We'll get to that later on in the presentation. The advanced stage projects, they have resource statements and fairly current PEAs on them, which we'll get to. The PEAs show an after-tax US value of combined of 870 million US dollars. We have a strong ESG governance, and actually I'm having trouble seeing that. Anyway, can you guys hear me if I just speak without the mic? Great. Yeah. I'm going to go down here, okay?
I can give you this one.
All right, thanks a lot.
Yeah, should
be. There you go. Anyway, the idea is here is we have a strong ESG environment and government security thing, and we've started that long before this ESG concept got mainstream in the investment industry, primarily because we've engaged with groups. We know we need community support, and that's the only way these projects ever get going. We're trying to maximize the value on our projects by advancing the ones we can through the PEA stage and through the PFS stage, because we think the PFS stage is our niche. After that feasibility, you need somebody larger and more capable and technically depth to do it for you. Our projects are highly leveraged to copper prices, and we have a reasonably experienced management team. Here's our catalyst going forward. You can read them for yourself. Van Dyke, we're moving it along forward. Schaft Creek, the program 2023, I'm happy to announce the joint venture announced a budget for 2023 of $17.2 million program for 2023 this morning. That's the largest one they've had. If that is spent, then they will have spent about $45 million on that project since they took over operatorship, and we're going to be advancing each one of our other exploration stage projects at the same time. Project pipeline, there's 4 projects which you own 100% of. One is an ICR project in Arizona, that's Van Dyke. We have 3 large porphyry copper exploration targets, or you shouldn't say targets, but projects located in BC and Arizona, and we have the 25% joint venture with Teck Resources in British Columbia. They're the operator, and essentially it's a free carry for Copper Fox through to production. Project locations, you can see the ones in northern BC, Eaglehead, Schaft Creek, and down in Arizona, Schaft Creek, M&I resources, 11.3 billion pounds of contained copper equivalent. Inferred resource, 2 billion pounds of equivalent. Copper Fox owns 25% of that. Van Dyke gets about 1.2 billion pounds of solidly recoverable copper, and that's estimated at a 0.9% copper recovery, or I should say 90% copper recovery. The Van Dyke, that's one of the ones, it's a brownfield, it's scalable. It's 75 drill holes in it, PEA. It has the potential for becoming a mid-tier copper producer with a capacity of about 85 million pounds a year. It was previously permitted on several occasions, and the key thing here is the low C1 and the all-in sustaining cost per pound of copper produced. These are, it's a comparison of their 2015 PEA we did and the 2020 PEA, which was recently completed. This shows you the changes, and the most important thing down here is the after-tax economics. It shows an after-tax value of 645 million US dollars and about a 43% internal rate of return. And I believe on any scale, that'll warrant further investment in the project. And essentially, that's why we do PEAs, to determine whether they warrant further investment in the project. This is your after-tax cash flow estimated on an annualized basis, and that's the predicted copper production over the life of mine. ISCR advantages, essentially, you put solution into the ground here, you got your recovery wells, and here's what you're targeting, is the mineralization that's in the fractures in the ground. It's not mining, it's leaching, there's no open pit, and as you can see, there's a number of advantages going forward from an environmental standpoint why IS or ICR projects are becoming mainstream. At Van Dyke, we plan to go after it underground. The reason being is that it reduces environmental social impact, but most importantly, we're going to stay clear of any of the known aquifers in the area. The other thing is that the host rock is the Pinal schist, no carbonates in the system, because carbonates, as you're probably aware, will cause a lot of solution chemical problems when you start to recover the copper. This is the location of the deposit itself right here. This is the previous mining work that's already been around there for over the past 100 years. And here's where the upside of the project is the exploration target, and it's about twice the size of the target, and we feel pretty comfortable that area here has a lot of potential to provide more copper oxide mineralization. Moving on to the Schaft Creek joint venture, it's in a 12-kilometer long trend. A number of zones of mineralization and a number of targets that exist outside the Schaft Creek deposit. The discovery zone to the north, nice sized intersections, fairly typical grades of mineralization you see at Schaft Creek. Most importantly, in 2022, we did about 5,000 meters of metallurgical drilling, and these are some of the near surface or at surface higher grade zones of mineralization. In this hole here, you're looking at 117 meters of 1.1% copper equivalent at surface, and that's within the first 5-year pit, and that could have very significant implications to the overall value of the project. The other thing we like about Schaft Creek is readily accessible transportation, seaport, and clean hydropower. This is a little bit about the joint venture itself. Teck is the operator, Copper Fox 25%. Project risk is mitigated because we have a senior operator in there advancing this project, because it is a very large scale project. Teck is responsible for funding the first $60 million of production of exploration expenditures. They've spent $29 million through the end of October. If they spend the $17 million, they'll be up around $45 million spent in the project since investment. 2 milestones remaining, and Teck has to finance our share of capital development at their prime cost plus 2%. Costs are recovered 90% comes out of the 90% of the free cash flow. The 10% is divided between the partners on a 75-25 basis. And Teck has a first right of offer on the project. This shows you a little bit about the Schaft Creek PEA that was done in 2021. There was an FS done in 2013. These are the various parameters you can see that come out of it. Key 21 years of mine life at 133,000 tons. That gave us the maximum NPV for the pit. And that only utilized about 60% of the known resources. Strip ratio is 1-to-1. About 161,000 tons of copper equivalent production a year. And here's another important thing. The C1 cost is about $1 per pound life of mine, and that's after byproduct credit. The all-in sustaining cost is about $1.18, and those are in the first quartile of production costs. It's got a lower than average capital intensity per ton of copper equivalent, and the project valuation is very sensitive to metal pricing. This gives you an idea of comparison of our two advanced stage projects, and we've run over most of those things, so just take a look at the slide. And leverage to copper prices, what we've tried to do here is show the Schaft Creek certain economic parameters, the Van Dyke certain economic parameters, and this is the base case we used at $3.25 copper for Schaft Creek, and the base case for Van Dyke was $3.15 a pound for copper. And essentially you can see what happens if you increase the copper prices or decrease the copper prices for the EBITDA free cash flow after tax valuation. So essentially when you look at all down, 25 cents a pound increase in copper prices increases your EBITDA life of mine of about $970 million US dollars. Same thing, it increases your after tax value by $240 million. The same thing essentially for the Van Dyke project. So our projects are very sensitive to metal pricing, and the metal prices we use were very conservative. Exploration stage projects, we have 3 of them. Eaglehead's in northern British Columbia. This gives you a little bit of an idea about some of the projects, some of the pretty much basic characteristics of them. Eaglehead, we like it. It's an advanced stage project. It's got 120 mineralized drill holes on it, and it's 4 open-ended porphyry copper deposits. We're working on that right now. We're putting it together. Hopefully we'll be making an announcement shortly about what our findings are. Sombrero Butte's in Arizona, and so is Mineral Mountain. That gives you an idea about the size of the porphyry footprints we're looking at or have established over the last few years. This is the Eaglehead Project. We acquired that in 2021. Sorry boys, how do I back this up?
Red button.
There we go. Anyway, yeah, we've been working on it over the last few years, and so here's just some of the historical drill results, which you're getting about, 383 meters of 0.44 copper equivalent, and in this hole you're looking at a fairly substantial interval of 0.6, 0.8 over 111 meters, and that's fairly typical of the Eaglehead project. And all our numbers are all done at the same basic prices. We use $3.25 a pound copper, we use $10 a pound moly, $1,500 an ounce for silver, gold, and $20 an ounce for silver. The one thing we did like about it was this. There was some preliminary metallurgical test work on the project, and this shows you very, very decent recoveries, all because you can liberate the mineralization on the grinding. And right now we're working toward getting to the point to see if we are in a position where we could do a resource estimate in 2023. Going into the Laramide Age Copper Province in Arizona, the Mineral Mountain is located on this trend, and this is a very prolific copper trend in Arizona, and Sombrero Butte is down here. And I don't know if you know this, but the Laramide Copper Province in southwestern North America, it's estimated to have a copper endowment of over 650 billion pounds of copper, clearly one of the better copper provinces in the world. And 96% of that copper is in the Laramide Age deposits. The other thing is Laramide deposits contain on average, and that's from the biggest ones to the smallest ones, about 9 billion pounds of copper. So they're not small targets, they're fairly large targets. These are showing you some of the ISCR projects in Arizona. This shows you some of the porphyry copper projects in Arizona. And then these are our 2 exploration projects. Sombrero Butte, that's located about 2 kilometers south of the Copper Creek deposit, which is now owned by Faraday Copper. It's underlain by the Copper Creek intrusion. That's Laramide hosted. That's the same intrusive that hosts the Copper Creek deposit. There's historical production, but here's the key thing, is the 2 large chargeability anomalies that we've identified. We do have a number of breccia pipes on the property. We're not focusing on the number of breccia pipes because that's not the target. The porphyry's the target. The breccia pipes we're using that as an indicator for what we think could be there. And this is the other one, is Mineral Mountain. I particularly like this one because it's on the Casa Grande to Miami Globe trend. And if you go back to some of the previous slides, you're looking at porphyry systems on that trend that has tens of billions of pounds of copper in them. We've identified it's definitely a multi-phase intrusion, very large copper footprint, very large chargeability anomaly. This gives you an idea of some of the styles of mineralization. I will note that the copper may be due to the secondary chalcocite because we believe we're at the lower end of a supergene enrichment zone, which is very typical of Arizona porphyry copper systems. And right now we're thinking about doing a more project-wide deep penetrating IP survey, and that is to finally fully define the resistivity and chargeability signatures associated with the mineralized footprint we've seen on surface. And again, that footprint is 4,000 meters by 2,000 meters, so that's a fairly large footprint. And that wraps up the presentation, so I guess we'll turn it over to you.